Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Erik Wetterling, founder and editor of thehedgelesshorseman.com, also known as the Hedgeless Horseman over at CEO.ca and on Twitter. And Erik, it's always great getting you on the show just to pick your brain as to how you're looking at investing in the junior resource stocks. We got a couple stocks lined up today to discuss, and without any further ado, let's dive into it. The first one we're going to look at had some recent news out that's Altamira, traded on the TSXV under the ticker ALTA. Break down what has you animated about Altamira.
I mean, just the basics is that they have a few very large projects in Brazil. The most exciting one right now, I would say, is the Maria Bonita discovery, which looks to be a disseminated gold system, kind of like, people like to say, snowline or whatever. I mean, I guess we're not totally sure what kind of deposit it is, if it's a porphyry or an intrusion. Still, it looks like a disseminated system where they hit, they did shallow or short holes in the first campaign and hit, 50 meters plus of 1 gram and stuff like that. And now they're stepping out from that based on geophysics and soil anomalies, which, I mean, it could be quite a large target in my book. And the interesting thing right now is that on the drill announcement, they said that drill holes will be orientated to the north and they're planned to extend 120 to 150 meters initially, with deeper holes to greater depth where any feeder structures are intersected. And then we got the news release 2 days ago, which said the title was Altamira Gold adds second diamond drill rig at Maria Bonita discovery. And I should say that drill hole MBA0010, that's the first hole of this new campaign, is currently at a depth of 228 meters. So, I mean, if you just look at the signal value there, it's like, okay, they plan to drill the first holes 120 to 150 meters. And now when they drill the first, or are drilling the first hole sounds to be still going at a depth of 228 meters, which they said in the previous news release, with deeper holes to greater depth where any feeder structures are intersected. So does this mean that they hit a feeder structure on the first hole? I don't know, but they obviously are already going past the planned drill depth for the first holes and announced that, hey, we're going to bring in a second drill rig. So it's like, if you just 2 plus 2 equals 4. Like, why would they do that? Does it sound like they're encouraged by what they're seeing? Yeah, I would think so. Not only the drill depth, but also the addition of a second drill rig, because they could have done that maybe initially. So it sounds like something changed. Basically, it sounds like the first hole is looking good. And that doesn't obviously mean that they can, tell what the grade is going to be or anything like that. But it's like enough so to immediately contract a second drill rig. And what is so funny about this sector right now, because it's so apathetic, I mean, I think on the day of that news release, which is like obviously bullish from a signal value perspective, if you had whatever chance of success priced in for this discovery to be something, let's say, I mean, this news release certainly would increase the chance of success, I think. And I think 30,000 shares were traded or something. It's absolutely remarkable. There is nobody in this sector right now. So if this was a hot sector right now, I don't know where Altamira would be trading. It for sure would go up, I think, quite a bit. Maybe, I don't know, half the current market cap or something, just from that news release alone. But it's like, this is the edge of, in my opinion, being in this sector right now, because you can literally buy value, at least implied value, for without paying anything for it, because there's nobody here that's reading these news releases, or if they are, they don't have any dry powder.
Man, Erik, I think that's such a great point, because you're right. In a hotter market, in a more trending market, a company adding a second drill rig and deciding, hey, we're not going to just drill to 120 meters or 140 meters, we're going to go down to 225 meters, would be something where obviously they see something they like, or they wouldn't be adding a second rig, they wouldn't be going deeper. So usually that would clue investors off to, hey, there must be something going on here. And I don't think it's just the case with Altamira. Like, as you say, it's the whole sector. No one's watching, no one's paying attention. So it gives the investors that are paying attention an edge right now. Another company that we're going to discuss and we've had on the show recently is Goliath Resources, traded on the TXV under the ticker GOT. We've had Roger on to discuss the 99 holes that they released in a big batch, but since then, they've also put out some news that at a different project of theirs, most of those 99 holes were at the Sherbet, Bonanza Shear, and Golden Gate zones of their primary project, but they've now put out samples from the Jackpot area and target, and they had some Bonanza grades in there. So how are you looking at the reaction to Goliath? There was a little bit of a move, but really for what they put out, it still seems like the same scenario as Altamira, where very few people are paying attention.
Yeah, I mean, this is also one of those cases. Again, like you said, it's not strictly tied to Altamira. It's like there's not really any buying interest. And if you just look at the chart for Goliath, it looks like it has a resistance zone at like 91 cents or something. I mean, it's never gone closed above that for like a year or something. And of course, that has nothing to do with value, for example. I think the value has been trending higher for Goliath since they started the first exploration campaign at the Sherbet target. And since then, it's just grown and grown and grown. And now we're up to like 3 main target zones. And what I find interesting in the third last news release, where they updated their models, their like theoretical endowment in these new zones. And it's like, those were some huge upgrades, both in terms of tonnage, but also in terms of grade. So, I mean, if you just use those metrics provided by the company, this is obviously like 100% blue sky based on what they are seeing right now. But you get up to like a 15 plus million ounces AU equivalent, like theoretical scenarios. Like I would be very happy with like a third of that materializing, or maybe 20 to 25%, and that would still possibly be something worthy of mining. And then you have the 2 latest news releases where it's like, they're finding 600 plus gram per ton AU equivalent at a jackpot target. And then they have, finds gold at Treasure Islands. Like, okay, those are obviously not drill holes or anything like that, but it's like, it's becoming pretty obvious. Like they started at the Sherbet with the Sherbet zone. Then they drill. All of a sudden they have 3 zones. And now there's gold all over the place, basically. 500 meter shear zone, or does it say? Yeah, outcropping shear hosted polymetallic zones over 550 times 450 meters, and whatever it was for jackpot zone. So it's like, okay, how do I make a simple case, let's say, for Goliath? Well, the 3 zones, total theoretical endowments up to 50 million ounces. And they have other zones in the area which they haven't even drill tested yet. So it's like the blue sky is open-ended, and it's at 50 million ounces right now. And of course, the most important thing is like, what are you paying for all this? I mean, if everything was priced in, you would need blue sky to materialize. Otherwise, you're going to lose money. It's like market cap of like 90 to 100 million Canadian or something. Is that pricing in a multi-million ounce mine in Canada with good grades? Absolutely not. So it's like, I think it's a pretty easy bet. I would expect that the more these guys drill, the more it's going to be the risk, and maybe blue sky will increase further as well. So I would just take a stab in the dark here and say that I think Goliath will be worth more a year from now, even more so 2 years from now, and even more so 3 years from now. And when you compare how Goliath might look in 1 to 3 years and compare to the current market cap, I think the market is severely underestimating what they have basically, and what the chance of them having actually proving up something that's going to be mined or acquired, whatever. And I think, there's a few things going on. It's like you have this resistance zone, which is something the traders obviously use. It's basically been capped. There's no real reason for that. It's not like the value has flatlined. And then you have, okay, they won't have that many results left, and then we go into the winter period, and they will also probably raise money. And it's like the market is typically short-term focused. So I think that's what the people are front running, and I think you can steal a lot of long-term value based on that. Because in my opinion, even if they would, they're not going to do that, I don't think. But even if you dilute the current market cap with 50%, I think it's still too cheap based on the long-term potential of this system.
Yeah, Eric, it's really a strange one with Goliath as far as the actual stock is still trading at the same level it was, like you say, 6 months to a year ago before they made the Golden Gate discovery, before they show that the grade is substantially increased at the Bonanza shear zone, before they released all these holes. They've released, I think, like 120 holes here and are at the same value as a company that they were before they released all the holes. And surely more value has been created here. But again, that's just the kind of market we're in. And we'll just see how things go. But it's an interesting point you bring up, too, about the seasonality of Golden Triangle companies where people know it's the winter. There's going to be limited news until the next drill season. And that could be the time for people to scoop up good value if they see some of the Golden Triangle stocks as a whole just kind of drift down. It's a good time to grab them before the next drill season kicks off in the spring or in the summer. Let's talk about one more area of the market, though. I haven't talked about this with you for a month or two, and that's the nickel market. There's a couple companies that we follow in the space, but just in general, there was a lot of excitement about nickel in 2022, especially when the Ukraine war thing happened because of the Russian influence in the nickel markets. But the nickel price got to that point where it peaked out. They shut the futures market down and reversed all those trades. And ever since then, imagine that, the nickel market has trended lower and lower and lower, and people have generally lost interest in the nickel space. But a lot of the nickel companies are still doing fantastic work. They're still building value. How are you looking at nickel, and how are you looking at the companies in the nickel space?
Yeah, I mean, it's like, what's the movie, the Gopher Day or whatever, with reliving the same day all over again.
Groundhog Day.
Groundhog Day, right? Groundhog Day. Because it's not specific to Altamira, and it's not specific with Goliath. I mean, this is why this sector is so incredibly attractive at bear market lows, and that's why it's like I have more, let's say, buys than I have money, because it's like every solid junior almost right now is, in my opinion, a no-brainer, almost by definition, because the prices are so cheap. I mean, they can have very low chance of success, and still they would be too cheap. They might be pricing in, 5% chance of success, but it's really 15. So that's like 200% undervalue, even though the chance of failure is 85%. But anyway, so the nickel sector, kind of the same thing. Like you said, market has trended down, and there's nothing more people hate buying than a downtrend. I mean, everybody's always obsessed about being in a bull market. Like, that's where you're gonna necessarily get the best returns, future returns, long-term returns. No, it's in the bear market. And so, like, nickel, that's got to be one of the most dislocated sectors around, because if you look at the retail-driven part of it, which is typically every junior now, because I mean, no big company or player, there's not enough liquidity that they can do anything in the open market. It's like there is absolutely zero action. There's nobody on planet Earth almost that thinks any of these or most of these nickel juniors are worth anything. And still, you see CNC, they got Agnico in. They had Anglo American in already. Now recently, Samsung SDI, which I assume is a subsidiary of Samsung, got in. And it's like there's a clause there where they can buy the Crawford project for like 100 million point five USD for 10%. That's like 135 million Canadian. So that's like put a value of 1.35 billion on the Crawford project. That stock has run up though recently to around, I think, 300 million. So I mean, it's getting there at least. But some of these other ones, like FPX Nickel, just announced that Sumitomo Metals and Mining are taking a position. So you have all these big mining companies, even gold miners getting into the nickel space, and Samsung. But if you look again at the retail-driven the market, there is absolutely no interest. So all the big money appears to be loving nickel. They're scrambling to get a piece of nickel projects, but retail, they're not touching it at all. So it's like you see these companies like Stillwater, which also has a huge resource in the US, and that's absolutely wide open. Could be a lot bigger, no trading. They even have Glencore as a strategic. That's a $90 billion company. They have ex-head Geo of Ivanhoe Mines in. And still, that is not enough at a 30 million market cap to have almost anyone in the retail space to say, I think this is a buy. It's absolutely wild, this sector. It's baffling. It's attractive as hell. And then you have like Magna Mining, for example, probably the most advanced nickel copper PGM junior in North America. Same thing there. It's like downtrend, nobody cares, there's almost no volume, and still you're seeing all these deals flying around. But there's no signal to the retail investor like, oh, maybe I'm missing something, maybe they are cheap, maybe nickel is not worthless, maybe nickel products won't be worthless for forever basically. But for some reason, nobody cares. And it's just one of the weirdest dislocations I've ever seen. Most juniors would kill if they have let's say a $90 billion company get in. And again, if this was a hot sentiment environment, I don't know where these juniors would be trading, but for sure they wouldn't be trading down here. It's like there's nobody left in this sector. And that's, in my opinion, why this is best opportunity. I think it's the best buying environment I've ever seen.
Well, Erik, we'll wrap it up there. But yeah, it seems like more of the same. We've talked about this for a while now, that there just seems like not even that the sector is disliked. There's just no interest at all. There's no volume in a lot of these stocks. There's no retail component. We'll see how things go over the next week or so as we're going to kick off conference season. We've got Roundup, we've got the MIF, we've got the Vancouver Resource Investor Conference. Maybe we'll see some more activity, either M&A or strategic partnerships, or some more retail investment after the next week or so once we get conference season kicked off. But until then, there's a lot of deals, there's a lot of low-lying fruit. There's a lot of companies, like we just highlighted, that are still building value. They're still advancing their projects, even if no one else is paying attention. And that can be a good contrarian time to accumulate these companies. So we'll keep following along with all of these stocks and all of the sectors. And until next time, Erik, looking forward to our next conversation.
Thank you, Shad. And as always, I'm biased, and some companies are banner sponsors as well. So consider me twice biased.